David's a CPA by background, focused in financial services. We have short 25 minutes. You could go ahead and read about our bios separately, but a depth of experience in wealth management space. So Binah today has about 1,600 financial advisors. We manage roughly $30 billion of client assets. We do this under 4 different broker-dealers. We can talk about the reasons why we have multiple broker-dealers. They all serve a specific purpose. And we focus on an area in wealth management where the trends are, we're the leader in what's referred to as the hybrid model. So a financial advisor can start and focus and manage their own RIA, run a piece of their business that's commission-based through one of our broker-dealers. So while we manage $30 billion, our platform has affiliated assets in excess of $400 billion of customer assets. Within our business model, we try to end up, we refer to it as the friendly model. And so as financial advisors move over, we end up having a variety of ways in which those financial advisors can be affiliated with us. Everything from a W-2 employee to an independent contractor using our corporate RIA to an independent managing their own RIA. We're one of the few, we are the leader in this hybrid space, and even with that, with our platform, because of the scale that we have, we're able to end up doing it with multiple clearing firms. So each one of our broker-dealers has a unique clearing platform. So when an advisor wants to end up moving over, if it's important for them to maintain relationships with Raymond James, with Pershing, with Fidelity, we end up having that optionality for them to be able to use one of the different broker-dealers to end up making it as seamless as possible for them to make that move and to end up having the best overall customer experience because they might be custodying their assets on their RIA at one of those given platforms. So what we've ended up building is a multi-brand, multi-clearing platform. It was intentionally designed that way. We're the leader in that space. We're the only ones in this space in the hybrid model that is publicly traded. That's important for a couple of reasons. With the trends of the RIA space, that more and more private equity money is fueling the growth of RIAs, we become a better, more transparent partner to these RIA platforms. You have private equity firms that are looking to the RIA platforms and saying, how do you know who you're doing business with? And as a private broker-dealer, the only thing that's ever made public is my balance sheet once a year. As a public company, you get to see in real time what we're doing. And as a lot of these RIAs are constantly out in the capital markets looking to raise capital, it becomes, I believe, a better answer for them to be able to answer that due diligence question, that we're more transparent than our competitors are. And over the last 2 years, we've won more and more business because of being a better partner to our RIA platforms. So a couple of trends that's happening in the wealth management space. This is the number of broker-dealers over the last 15, 20 years. There's a consolidation that continues to end up taking place. The number of broker-dealers continues to end up shrinking. At the same time that's going on, the yellow line is the number of RIAs that continues to end up being created. So you have more and more financial advisors, more and more brokerage firms leaving, more and more RIAs that are being created at the same time. We built this platform to be right at that X. And so we support the RIAs. We do it at scale. We provide a platform for RIAs to be able to use us for a variety of different services. The interesting thing is during this X, the number of financial advisors registered in the business has only decreased by 1.5%. So at the same time you have broker-dealers dropping, RIAs increasing, the overall age of the financial advisor is aging. The average advisor in the independent broker-dealer space is a 60-year-old white male. And so the industry's aging, and at the same time it's transforming into more and more RIAs. We sit right at the cross-section of that movement. One of the ways to end up measuring growth is AUM. As you could end up seeing over the last 4 years, it's been about 15% increase for us. We've gone from 2020 from about $15 billion of customer assets to right now to about $30 billion of customer assets. When you end up looking at valuations and M&A, assets under management, one of the key variables that people end up looking at to be able to end up pricing wealth management businesses. And so I think that this strong AUM growth shows the trajectory of where we're going and where we're headed within this business model. Our brands today are PKS is the primary brand based in Albany, New York. It has a clearing relationship with Fidelity. Cabot Lodge Securities, I started about 15 years ago. Right now it's clearing at Raymond James and RBC. And then in 2020, we ended up buying a firm in Chicago by the name of World Equity Group, which has RBC and Pershing relationship. The three firms, we end up having a shared service environment. And so some of the key people are working across the different platforms. But from a financial advisor's perspective, it's where do you need to end up being to end up running your business as efficiently, effectively as possible, and we could end up placing you into one of those three firms. Some of our RIA partners that we recently ended up bringing in on board first one's Concurrent. Concurrent was one of Raymond James's largest OSJ networks. They were looking to spin off, create their own corporate RIA. Again, you can see it was about $9 billion in assets. It was about the OSJ itself had about 100 financial advisors. They transferred and ended up moving about $725 million onto our platform, and the balance was in their own corporate RIA. Last summer, Merit Financial Advisors, a large firm out of Atlanta, was leaving one of our competitors, LPL. They ended up joining us, again, about $12 billion in customer assets, about 130 financial advisors, and they transferred about $1.6 billion of assets onto our platform. Right after we ended up doing the Merit deal, there was a firm in RIA also at LPL called Bleakley. Again, $10 billion of assets, 40 advisors, and about $250 million of AUM ended up joining us. So as I had said earlier about each one of these have private equity partners. And so as I mentioned earlier about our platform being friendlier to large RIAs that are looking at private equity, that we give them a better answer, a better solution, be more transparent. Here are three that you can look to since the time that we had announced we were going to go public.
And they're very acquisitive as well, so they have grown substantially over the time that they've been on our platform. So it's acquiring and partnering with these groups just continues to add to the platform.
So the platform today, we are the leader in the hybrid-friendly space. Because of the size and scale that we do it, it is an open architecture from a custodial side platform. We end up having multiple clearing, both at the broker-dealer and the RIA side. We're bringing in other platforms, including that are needed to end up being comprehensive wealth management, including insurance, advanced reporting, and other growth strategies as well. Here's some of the selected financials, and I'll let David talk about these.
So, the financial information here is the most recent information that was filed in our 10Q that we just filed. But just to give some highlights of it, and just to give, I guess, a matter of perspective, the company went public in March of 2024. We were listed on the NASDAQ at the end of March of 2024. So the financial performance of the company since the time of the transaction has been very representative of the very strong core piece of our business. As Craig has mentioned about, we've had significant AUM growth over the period. Period over period, it's a 10.6% AUM growth. It's a 10% revenue growth. Gross profit, which is our revenue less what is paid out to our financial advisors, has been stable in that 18 to 19% range. Our gross profit has grown over 12% period over period. And most significantly, we've GAAP net income of $2.1 million versus a net loss in the prior period of $3.5 million, which again is representative of all the noise, so to speak, of our transaction and going public is out of our financial statements, and it's performing as it should be. Significant EBITDA growth of nearly $6 million versus $1 million in a prior period. We are optimistic of having a good fourth quarter. One thing that's important to note from our financial performance is that our revenue, while a lot of it is in the broker-dealer business, which is commission business, and transaction-based, we have a significant amount of asset-based revenue that is tied to the market and recurring in nature. So 2/3 of our revenue is recurring in nature. And that just, again, represents the core of our business and how steady our business is. So we expect to finish the year strong and have a good year with a lot of momentum going into 2026.
So right now we have a strong organic advisor onboarding strategy. We're riding the right wave. You see more and more stories and headlines of wirehouse advisors looking to leave and go create their own RIA. Our pipeline for that business is as robust as it's ever been. We also have a M&A roll-up strategy of using the public company as an opportunity to go as the consolidation broker-dealers continues. We think that we end up having a currency in which to go continue to end up looking strategically at M&A. Because we do this at scale with close to 1,800 advisors, the idea of being able to develop products, both investment banking and other services, has been asked of us, and so we are developing that as well. That will end up long-term helping us to improve our margins, and at the same time, one of the things that we're seeing, as I mentioned earlier, the average advisor's 60s, partnership growth opportunities and succession planning is something that they're constantly looking to us to end up helping them solve that problem. And so as a public company, we also have a number of strategies that we think are better than our competitors in being able to help them solve that problem as well. Again, the summary of the platform today: $400 billion of affiliated assets, 1,600 advisors under 4 different unique brands, the leader in the hybrid strategy. We have end-to-end solutions, tech-driven efficiencies that we're starting to implement because we're able to do this now at scale. And we are positioned right at that corner of that X that I had mentioned earlier to really take advantage of the trends of where we are within the industry. So quickly on valuations, and I'll let others in this room dissect it, but when you look at 3 recent transactions in the broker-dealer space, the most recent was LPL buying Commonwealth. As I had mentioned, AUM is usually one of the key drivers that are mentioned in deals. The transaction value for the LPL deal that was announced was $2.7 billion. They had $285 billion of AUM. It's a little less than 1% of AUM. A much smaller transaction, but also, again, these are the three most recent. B. Riley ended up buying Stifel ended up buying B. Riley's wealth management business. Obviously, it was a fraction of the size, but the valuation metrics was very similar. As Robinhood ended up buying Trade PMR. So even if you use the lowest of the metrics of AUM, call it 70%, 70 basis points. Do the math. That's we're sitting with about $30 billion of AUM. 70 basis points of that puts you at 210 million. We have 16.5 million shares outstanding. I think a recent research report ended up saying, based off those metrics, that gives us about $11 or $12 stock price. I think right before this meeting, the stock was trading at about $2.50 a share. So it gives you an idea of where we are relative to transactions. This is the first presentation since we've gone public that we've ended up making to the investor community. And that's a quick story about us. I know that there's a strict 25-minute time limit for this presentation. We do have a couple minutes if there's any questions.
I'll talk it go. You mentioned that you have 30 billion in assets under management, but the partner network has around 400 billion. Could you talk a little bit about the opportunity to pull over some of that 400 billion? Have you seen somewhat of an acceleration, and once a person from a firm joins, have you noticed starting to pull more over?
Yeah, so we work very closely with our custodial partners, so that the idea is not to pull more over per se. It's how do we look at the $400 billion to provide products and services that might be of interest to them that they're not able to end up seeing somewhere else. So as an example, first quarter of this year, we ended up being involved in a offering where we raised $100 million in a unicorn pre-IPO offering. And so for us, the idea of being able to offer investment banking type of products into this much larger platform, at the end of the day, if they do it in their advisory account or they do it on a commission basis, is entirely up to them. For us, though, it's an opportunity. It's relationship management. If you're managing $100 million, 10 million with me, 90 million away, if I have something that you're interested in and that's beneficial for your clients, you'll be able to end up, I'm talking to it from a standpoint of $100 million, right? Not just the 10 million. So to me, that's where the opportunity is how do we look at that bigger picture? First quarter is a great example of it. Like I said, we raised about $100 million in a pre-IPO deal. Last month, we ended up doing another large pre-IPO trade. We have another large deal coming out that will probably get done by year end, if not first quarter. So looking at investment banking related activities, I look at a $400 billion potential platform to be able to go possibly make those types of offerings.
Right. Makes sense. And then just a quick follow-up to that question. The growth in assets under management since 2020, has that primarily been organic, or is that M&A driven?
Since 2020, that was the last acquisition.
Yeah.
After that, it's been, for the last 2 years, it's been just organic growth.
Okay. And then maybe just the lead up time of when you sign a new client and developing that platform, just curious about.
Yeah, these brokers and advisors don't move without a lot of thought. And again, this is mostly wealth management. This is not your old stockbroker that might not have large relationships, right? So If you're a financial advisor and you're thinking of making a move for whatever reason, it's a big deal, and it's well mapped out and planned. So we already ended up having a sense of what most of 2026 will look like, and conversations months in advance before they make the move. So financial advisor might end up notifying a firm on a Friday that they're leaving, try to do all the paperwork by Monday morning. But in the background, between deployment and everything else, those conversations have been going on for 60 to 90 days at least.
But one of the things that our platform provides is because we are multi-clearing, multi-custodial, it facilitates because you don't necessarily have to change firms you're at, custodial or clearing. We could slot you into one of our brands. So that facilitates and speeds up the transition in some cases.
Yes.
So first and foremost, congratulations to the size that you got to. You surpassed a lot. It seems to me that you surpassed a lot of the platform related RA firms because this is kind of journey to get from like 5, maybe 8 billion to 30 billion. So congratulations on that.
Thank you.
Thank you.
And I'll probably ask more in our one-on-one, but my question to you is how important, it seems like the investment banking, as you said earlier, is important for transaction access to deal flow. Is that the unique value proposition you guys are trying to provide to the...
Now, I use that investment banking really as an example.
4 minutes remaining.
Thank you.
But in particular, banking. How important is banking to the expansion of banking?
I think it's a unique opportunity. Put it in perspective, I think it was less than 3% of our total revenue.
Right.
So, it's not a significant part of the business today. I just use it as an example of, as we start focusing on the 400 billion, where it becomes a unique opportunity within the model. For the last few years, the focus has been more on building out as fast as possible to get to scale. Now the focus is continue to do that, but also bring in relationship management of how do we do more within.
And we brought on a chief business development officer in May 1st, and that's what his role is really deepening those relationships with those firms, which is upwards of, it's 500 different firms, RIA firms that represent all those affiliated assets.
But there's about 4 different silos of opportunities for us to go strengthen relationships. Investment banking just being one of those 4 silos. But happy to talk about some of those others later.
Thank you.
Yep, thank you. Any other questions?
Is there any desire to target independent RIAs starting from scratch versus trying to pull existing broker-dealers?
We do that all the time.
We have an incubator program too that will work with people who are transitioning, and we have 3 corporate RIAs, our own that we own, that we're in the midst of merging into one, and that's a $3 billion corporate RIA in of itself. So we're definitely looking at opportunities to continue to grow that.
So we both recruit individual IARs that either aren't ready or want to necessarily maintain or run their own RIA, state or SEC registered, and so they can affiliate with us either permanently or temporarily while they form their own.
And it also provides us another service, would be this a built-in succession plan opportunity for somebody who is looking to retire.
With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple, then Channel Check truly is your tree. It's an investor community where you can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series lunches, and to be part of the preeminent annual Small and Microcap Investor Conference, NobleCon. And here's the best news. Since Channel Check is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why Channel Check is North America's leading source of research on the companies that just may change the world.